Hey, Jerome Powell, man. Come here. Come here. You're gonna need a pivot, man. You're gonna need a pivot. Oh, man, so markets claim that the Fed must pivot now. You've got the dollar index skyrocketing here. You've got European banks in crisis. Bitcoin moving nicely to the upside. We've just had great PPI inflation figures. What a day it's been. We're going to break down exactly what this means for a market and why the market now predicts 63% of the market are shouting and calling for a Fed pivot imminently. Smash some likes. Don't forget to subscribe, guys. First and foremost, we need to cover off the fact that European banks are in crisis. Yes, Credit Suisse, which I spoke about as early as October last year. I'm going to cut in a clip here for you guys to watch. Credit Suisse is at a critical moment as bank prepares for latest overhaul. Why is this a big issue? Credit Suisse CDS are at 14-year highs. A CDS is known as a credit default swap. Best way to think about this is insurance against a stock or a company, in this case, Credit Suisse, going bankrupt. This is an insurance policy against them defaulting. It's at 14-year highs. The markets believe in these guys are trading insolvent and they're in big trouble. And we know Credit Suisse is no small fish. They sit here within the entities which are allocated as systematically too big to fail for the US market. We've been told not to worry. Credit Suisse's chief executive says we have a strong capital base and liquidity position, and obviously he has to come out and say these things. But if we look at what history has taught us, Lehman Brothers said the same things. They famously collapsed back in 2008. Lehman hopes for capital raising plan soon. So this has got the markets worried. Now we could be heading for a straight financial crisis. So as you can see, I spoke about this from the credit default swaps. I knew this because I used to trade credit default swaps in my traditional finance role. That was obvious back in October. Now you can see it's really starting to stick out like a sore thumb. Their biggest backer, Saudi National Bank, has said, we can't provide any more finance for you guys. I'm sorry. But regulatory reasons say we cannot hold more than 9.9% because the limit is 10% of any given one stock. So Credit Suisse are in a bit of a pickle. Many other European banks are struggling as well. If you take a look here, you can see the breakdown. Banks such as UniCredit, Fineco Bank, and Monte dei Paschi all struggling here in the early hours of trading on Wednesday. Now, what does this mean? What impact is this going to have? We know we have the Silicon Valley issue, Silicon Valley Bank. We know we had Silvergate. We know we had Signature. To put things into context, Credit Suisse is a different beast. It is much bigger than Signature. It's at least 2.5 times Silicon Valley Bank. This would be a major collapse. And already, if we know Silicon Valley Bank was too big to fail, right, and they were the 18th in the US, what about Credit Suisse? Credit Suisse is obviously too big to fail. The government's going to have to stop raising these rate hikes, have to stop becoming accommodative again to protect their precious little bubble that is traditional finance. And this is just a shot in the foot. This just reminds the government that every time they try to choke crypto, they just end up looking really, really silly because they just ultimately self-implode. Their system is weak. It's fragile. They know it. It couldn't even handle the rate hike that we have seen throughout 2022. So this is the rate hike cycle we've been on. If I zoom out, you can get a little bit more perspective on kind of how steep it's been. Yes, it's the fastest in 40 years, but it couldn't handle it. The banking sector is now creaking at the helm, and that is why markets are not only pricing in a pause at the next meeting, which is shocking. This is a big flip-flop, guys. This was not like this. If we just checked this about 8-9 days ago, the markets were prepared for 50 basis points. Yesterday's CPI would have maybe been enough to warrant 50 basis points had we have not had the banking weakness. Now, with good PPI data coming out on top of that, there is no reason for Jerome Powell to even do 25 basis points, which is what the markets are saying now. We just had a majorly impressive PPI inflation figure come in. We had 4.6% year over year versus 5.4% expected. That is the slowest increase since March 2021. On the core figures, which of course exclude food and energy, 4.4% versus the 5.2% expected. Again, slowest since April 2021. And month on month, 0% here on the core versus the 0.4% expected. But it gets even better. If you take a look at the headline month on month, always look at the month on month, guys. That is giving you the run rate. Year on year gives you an idea over the last 12 months, but you want to look at the month on month. This was expected to come in at 0.3%. 0.3% annualized is a 3.6% inflation figure, but it came in at minus 0.1 deflationary. This is huge. This is saying we're deflating at the run rate of 1.2% per annum. Really positive news here, showing that January was just a blip. Remember, I said that this is going to be defined by whether February comes in back on track and proves whether January was just a blip. And we've got exactly that. January was really high due to the seasonal adjustments and all the various other bits and pieces that led to January just being an anomaly. Now we're seeing that Feb data start to come in line. On top of that, the banking stress leaves Jerome Powell in a situation where he's going to have to pause. So now the conversation needs to switch from not if we're going to pause, but when are we going to pause? So you're seeing now that the market's trying to bat to and fro whether we pause now or we pause at the next meeting. That's what they basically decided. Every time you refresh, this is changing. So literally right now, it's about 50-50 here. 50% are just sitting here thinking, okay, maybe we're going to get a pause. 50 is saying, let's have 25 base points. Let's go to the next meeting, which is on the 3rd of May. And you'll see for the 3rd of May meeting, most people are saying, after we have had 25 base points at this meeting, let's go ahead and pause at the next meeting. But here's where it gets interesting. Let's fast forward to June. And on June, you can see that the majority of the market thinks we're going to at least have one decrease. So we're going to sit either between 4.25 and 4.5, keeping in mind that the lower bound is 4.5 now. This is a huge shift. Remember, Jerome Powell and the Fed came out at the start of this year and said in their summary of economic projections, we're not going to get any rate cuts this year. But the market's saying otherwise. They're saying, look, you've gone ahead and broke stuff. PPI and inflation is coming down. Stop breaking stuff. Stop driving us into an unnecessary recession. Do not pull Volcker us like we saw in the 80s and crack on, and let's stop these rate hikes. Fear and greed index is sitting at 50. The market's in a little bit of a yo-yo period, but the fundamental data is good, and that is what is important. If we take a look at Bitcoin, yesterday was an absolutely insane day. We ran all the way up to 26,500 and then fell all the way back down as well. So we had swings from 24,000 all the way up to 26,500. Crazy volatility intraday. You degens are absolutely insane. I mean, if you look at this here, just above my head there, you can see that yesterday had shorts liquidated for 178 million, but 123 million longs as well. So everybody's so eager to short with leverage, to long with leverage, that you're just wrecking each other and creating volatility. And for the long-term holder, we just sit here and laugh that you guys are crazy. Whoever's DJing these moves, you're absolutely crazy. Now, what you want to see here is we are still facing resistance at 25. We're holding where we're at quite nicely, but you do now over the next couple of days want to see Bitcoin plummet on past 25,000. I do not like the fact that we are precariously sitting under here. We've had enough good news over the last 48 hours to see Bitcoin take 25,000 and sit at 25,500, sit at 26,000, that's fine. But I don't want it sat here below a level where we've been rejected so many times. That gives me a little bit of cause for concern. So I do want to see that plug on now that we've got good PPI data. We can see the banks are in issue. Go and move on past 25 and consolidate above it is what I'd like to see here. If we bring out the daily EMA ribbon, you can see we have now managed to avoid the EMA ribbon from flipping, which is really good. This is now in a bullish setup. The lighter color lines above the darker color lines. Again, ijaz.uk/TA. If none of this makes sense, go learn all these TA basics and fundamentals there as well. And even if you're advanced, there's definitely some stuff you're going to learn in there, and it's completely free. So that's where we're sitting right here on Bitcoin. Now I'm going to come on to Bitcoin very shortly, but I need to go and take a look at the dollar index with you guys, because a lot of people have been asking me, why is the dollar index rocketing? The dollar index is up 1% today, but crypto is still doing okay. What is going on? Well, you need to understand what's happening in the greater market. Crypto is moving for the reasons I've just shared, slightly up, 0.8%, nothing crazy. But if you look at the traditional markets are not happy. Here in the pre-market, NASDAQ down almost 1%, 1.5% on the S&P and 1.6% due to the Dow. A lot of this has been caused by the banking stocks as well. There's still some fears in the market. If we take a look at the dollar index, you have to understand that this is normally inversely correlated to crypto, but you have to understand that this is measured as the dollar's strength relative to a basket of other currencies, which primarily includes the Japanese yen, the GBP, and the euro. Okay, very important. So if we do then take a look at those currencies, and we take a look at the GBP, falling big time, down 1% today. If you look at the euro, down 2% today, because of the things we've just discussed around the contagion of banks. Okay, UK, big hub for bank, Europe, big hub for these banks, worried about this contagion element. And that is why, even though the dollar will be weakening relative to the euro and GBP, it is getting stronger, which is why the dollar index is rising. That being said, Bitcoin can still move today regardless of the dollar index, because dollar index is only being propped up by the weakness of the GBP and the euro. Hopefully that makes sense. Bitcoin dominance continues to rise. Altcoins in the red today. Ethereum down 1.5%, Avalanche down 2%, Phantom cooling off 3% after a crazy day yesterday, Matic down 2.5%. So it is a red day for altcoins. This is Bitcoin managing to hold a bit of green, but it is tentative. My view is I'm focused on the data. I couldn't care less about the technicals right now. I just want to focus on the data because the data is showing us positivity. And the key thing I was looking for was exactly that. Would January just be a blip in terms of inflation? That's been proven true. January was just a blip, and now the February data is coming in line. If we take a look at Bitcoin here, you can see we're back into our ascending broadening wedge. It's incredible how this continued to hold even on the bottom side here. I didn't adjust these lines whatsoever. We had this draw when we bounced off here and bounced off here, and now you can see even bounced off the bottom as well. So it's now working its way to the top of the wedge. And normally when you break out from these kind of patterns, you kind of have a bit of a move like this, and then it just goes straight out of the pattern, explodes out. That is what we're looking for here on Bitcoin. On the longer term weekly time frame, I do still want to share with you that we are forming this longer term head and shoulders pattern, inverse head and shoulders pattern. We are trying to break this neckline. We need to break it nicely. We need to come back up, break out of it. It normally wants to get a retest, and then you want to see us have our big explosive move. Remember, once we clear this 25,000 level, I know I sound like a stuck record, things do really start to get a lot easier for crypto. But this is a stronghold for the bears. We've been rejected before, and that's why I want to see us get above this 25,000 level whilst we have good macro data. The macro data's on our side. Banks are collapsing, which is good for crypto, right? We're in a position now where the government is going to have to come out and prop up these banks, which is easing of policy. They're going to have to force the hand of Jerome Powell to pause because the banks are creaking. So you're going to have to pause even if inflation weren't in line. But the fact that inflation is in line and the banks are going to be telling Jerome Powell to pause as well, this is double whammy for us. It's good news. So I do want to see Bitcoin get through this way. You can see the VPVR, as we've been discussing, gets thinly traded in this gap. Do want to see us work through this way and try to fill this gap up towards at least 30, 31,000 is what I'd be looking for. But one thing is for sure, the data is really starting to look nice and bullish. We are very far away from where we were just 6 months ago. Things are looking a lot better. I know the banking system provides a risk, provides some contagion, and the market is very concerned about that. But you've got to understand from a crypto perspective, if we're going to be heading into a period where there's a pivot, where we stop hiking rates, where we pause and then eventually discuss a cut, that can only be good for crypto. Crypto is a function of liquidity. I'm not saying this is good for the economy. I'm not saying this is good for traditional finance. I'm saying I think this is good for crypto because crypto relies on the easing of monetary policy. And if we could be moving away from our tightening stance into a loosening stance, crypto will be a huge beneficiary. Don't forget to subscribe, go watch this video here, and I'll see you in the next one.